biotech industry faced many headwinds in the third quarter. After general equity markets came under pressure with the sell-off in the Chinese market, an increased public focus on drug pricing caused biotech stocks to underperform. The Nasdaq Biotech Index lost 17.9 points in US dollars, while the BB Biotech net asset value was down 17.7%. The share price held up better with a decline of 10.1% in US dollars. This led to a net loss of 575 million Swiss francs for the third quarter, compared to a gain of 483 million for the same period last year. For the 9 months period, BB Biotech's total return amounted to 13.8% in Swiss francs and 16% in US dollars. Since we consider the sell-off and the fears around drug pricing overdone, we reinvested the cash quota of around 200 million US dollars plus an additional 90 million Swiss francs of borrowed capital into existing large and mid-cap holdings, as well as into 2 new positions. The rhetoric around pricing and patient access from the Democrat presidential candidate Hillary Clinton caused investors to grow increasingly concerned over the sustainability of drug prices. While the focus was on a selected group of specialty pharma companies known for hiking the prices of old drugs, the negative sentiment resulted in general outflows of the biotech sector. Clinton's ideas are not new, as similar ideas have been proposed in the past and met a lot of resistance in Congress. Even if we end up with a more price-sensitive environment in the US, it is our strong belief that innovative drugs that meet high unmet medical needs will be able to be priced appropriately also in the future. Focusing on pharmacoeconomic considerations will be more important than ever in determining which companies to invest in. The focus on innovation has always been an integral part of BB Biotech's investment philosophy, and therefore we are well positioned in this environment. We saw a multitude of drug approvals from our portfolio holdings in the third quarter. Some highlights are the US approvals of the PCSK9 drug Praluent by Regeneron Sanofi, Orkambi from Vertex to treat cystic fibrosis, Verubi, developed by Tesaro to treat chemotherapy-associated nausea, as well as the approval of Novo Nordisk's basal insulin Tresiba. Furthermore, we witnessed several clinical updates. Novo Nordisk showed superiority of semaglutide over Bydureon on blood glucose lowering and weight loss. Gilead announced high cure rates across all hepatitis C genotypes with its combination of sofosbuvir and velpatasvir. A disappointing update came from Tetraphase. The company announced that they had not achieved their primary endpoint in a phase 3 study of eravacycline in complicated urinary tract infections. The study was widely perceived as low risk, as they had in the past reported a lead-in study that was positive. The share price drop of more than 75% was a sign of the unexpected nature of this result. Such examples highlight the inherent risk in drug development and the importance of diversification. This quarter, we added 2 small positions in Esperion and Prothena. Esperion is developing ETC-1002 to reduce LDL cholesterol levels in patients who either are on statins but are not controlled sufficiently, or in patients who are statin intolerant. The shares in Esperion experienced some volatility in the third quarter. First, when the label for Praluent turned out to be for a narrower indication than anticipated. Further uncertainty was introduced when the company disclosed that they may, after all, have to complete their cardiovascular outcomes trial before approval, which would push timelines back. We were buyers on weakness and see large upside potential with moderate assumptions. Prothena is developing NeoD-001 for the treatment of light chain amyloidosis. This is a rare disease characterized by the deposition of proteinaceous plaques in various organs, leading to a life expectancy of 1 to 3 years, depending on which organs are involved. NEOD-001 is an antibody designed to clear out these plagues, and initial biomarkers data look very promising. The drug is currently in phase 3 development, which will not read out for some time. In the meantime, we will get another update from the phase 2 dataset at ASH in December 2015. For the fourth quarter, we expect the approvals of Actelion's Uptravi, Alexion's Canuma and Strensiq, as well as Gilead's TAF. We will also get important clinical updates from PTC Therapeutics and Sempra, amongst others. In general, we expect further volatility in the sector, as the focus on drug pricing and healthcare costs will continue into the primaries and potentially well into the election year. Where we saw a flurry of M&A activities in the first half, this has come to a halt in the third quarter, and M&A premiums priced into many stocks have evaporated. We think that it is healthy for investors to go back to looking at fundamentals in the biotech sector, which continue to be very strong. Most companies have, in wise foresight, used the strong performance in the sector to capitalize their balance sheets and are now well positioned to push forward their drug development even in more volatile markets. True innovation, focusing on the patient and the healthcare system, will be rewarded, and we believe that dense news flow and positive updates will eventually provide support.